It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast. Hey, we are getting extremely close now, aren't we? Wednesday, December the 18th. It is a mad scramble out there with plenty of shopping going on. In just a moment, we are going to take you to Melbourne. And Melbourne's property market, it has softened, as we know, and in some locations, it has softened significantly, with house values dropping up to 10% in sought-after areas over the past year. That's from CoreLogic. Bayside areas like Chelsea saw the largest decline. That was down 10.2%, while Bonbeach and Dramana also recorded, they say, some steep falls. Overall, Melbourne's home values are 2.3% lower than last year, impacted like things like the increase of property tax, and I want to ask our next guest about that, and a growing supply of homes that are being brought to market. Lifestyle and peninsula markets remain well below their pandemic-era peaks. And off the back of that, let's catch up with Candice Blanch from Homes and Acreage in Balnarring. Now, you're the principal there, Candice, but you represent a few areas. So first off, welcome to the Real Estate Breakfast. Perhaps you can tell us what other areas you're representing.
Thanks for having me. Absolutely. So we started out at Balnarring and we've recently spread across the whole peninsula. So we've now got offices through Somerville, Flinders and Mount Eliza, just to cover the whole of the peninsula.
Now, you do something a little bit different. It's in the title of the name of your business, Homes and Acreage. How much of the acreage part does that make up of your business there?
About 50-50 now. So Penny and Grant, who started the business, have a lot of background in the horsing world and the farming. So they saw a bit of a niche in the market and opened up Homes and Acreage, and I came on board to run the residential section. So we've just found it's a nice little puzzle of mixing residential and acreage.
I was just saying at the start, the Melbourne property market, it has been softening over a period of time during 2024. How have you felt that softening?
Yeah, it's definitely been a tumultuous 18 months. So obviously over COVID being such a beachside suburb, we did really well. I think summers went up around 60%. It was one of the fastest moving suburbs on the peninsula. But I guess the more you go up, the harder you fall when markets do get tougher. So it has been a rough 12 months on the peninsula at the moment. But as long as you're priced right and you're marketing well, there's still plenty of properties moving.
Yeah, one of the things that seems to have changed in 2024, and maybe your area benefited from this during COVID, and that was the work from home aspect and people moving out of Melbourne, going into smaller areas like where you are. And that's kind of changed over the last 12 months, where people have been going back into the office. Is that a factor where you are?
We definitely had so much traction over that COVID period with people wanting the lifestyle of larger land or being closer to a beach. So we couldn't keep stock. It was absolutely amazing. We have noticed that there's more peninsula to peninsula buyers now rather than people coming down from Melbourne to the peninsula. So there has been a change in the market there.
Just explain that a little bit more, one step further. So in terms of people that are coming in, where they're coming from?
So what we're finding at the moment, we're having a really good, just within Homes and Acreage, matching people that grew up on acreage that couldn't then afford to buy into it would start in residential and build their way back up to get to acreage. And then a lot of people that have been on the 10, 20 acres, they're now wanting to downsize into something more residential. So rather than having a lot of people coming down from Melbourne to get onto the peninsula, I'm noticing it's more people actually just moving around the local areas.
Are people buying these larger properties with the intention of subdividing? Is that sort of an option where you are?
Not really, no. There's a lot of green wedge on the Mornington Peninsula, so it's why the land value does stick to such a high level, because you actually just can't tear it all up. So throughout your Balnarring, Summers, Merricks, Flinders, the land's really protected. So it's not as much subdivision as, say, your Morningtons, Mount Marthas, Somervilles.
Now, you were telling me off air before we got going, long-term ownership is a real thing where you are, and we also want to talk about the land tax. Are those two things intertwined at all?
Oh my God, absolutely. So you almost couldn't buy property in certain areas on the peninsula because they were so tightly held. So your Point Leos and Shorehams and Merricks, they're just passed down from family member to family member. Whereas now, unfortunately, and some of the stories are a little bit heartbreaking where it has been in the family for so long, but with land tax and now vacant land tax as well, if people aren't making the most of the properties, I'm finding that there's a really heightened level of properties on the market because of that.
What about the investors? Because it's something we've really sort of drilled down on across Victoria with these investors just selling part of their stock. They just cannot make the numbers work with the land tax with everything else, including the current interest rates.
Oh, there's such an opportunity at the moment, is my gut feel. So if I was going to be buying and selling, I think it's such a good time to do it because we are in a low market. So if you're buying and selling right now, you're paying less stamp duty, you're paying less agents' fees, and there's abundance of stock on the market as well. Although it is quite tumultuous and prices have come down, if you look at it, it's actually a really good time to be transacting real estate.
Now, the ball has shifted to buyers, so buyers can put more of those conditions in. They've got to chase a little bit harder for buyers, of course, the vendors' agents. Is that the case where you are?
Yeah, at any time when prices are down and there's a lot of stock on the market, it's going to become a buyer's market. It's really important to market really well, know who you're selling to, know your buyers, because there's plenty of stock for people to choose from.
Now, 2024, as I said, we're getting very, very close to Christmas, the 18th day of December. You'd be looking forward, like the rest of your team, for a little bit of a break and then back into it for 2025. What are you holding out for the most as we look towards 2025?
Well, it's funny because you would think that we were winding down, but Homes and Acreage set a bit of a target that if we could sell 20 properties throughout the team in 5 weeks, we would do something really special for the team. We're not quite at the end of that and we're already over the 20 sales. Everyone thought that we might be slowing down and getting a break, but in fact, it's actually very exciting because there's a lot happening.
Yeah, so what have you done? I mean, everybody now wants to know what is the carrot?
Everyone wants a super yacht, but I think that might be a little excessive. So we're putting our thinking caps on about what the reward will be.
Oh, so they don't know yet what the reward is. Okay, all right. They might be.
Everyone's pushing super yacht or designer handbags at this point.
Okay. So you go out, you have that fantastic day. 2025, what do you want to see happen in 2025 for your area?
Look, we're coming from a company structure at the moment. So I think within the team, we just want everyone to, it has been, a really tough 12 months and a lot of work goes into everything that we do. I just think everyone needs structure and positivity. It would be great to see some interest rate declines, obviously, just to bolster the market a little bit. But I think people are coming on board with knowing that prices have adjusted. It would be nice to see just a little bit more positivity in the market.
Over the Christmas, New Year, everybody will be turning to their favourite music collection. Give us a couple of those musical choices that you might be listening to, Candice.
Oh, God. Mine are pretty old school. Do you know, I actually am really into It's Random But Glycerine right now.
Glycerine? Yeah.
Mm-hmm. Yep, different. Or there's always Mariah Carey for Christmas and Michael Bublé.
Oh, I thought you were going to say Kate Bush there, Wuthering Heights.
No.
All right. Well, great to catch up with you and have a bit of a talk about your area. Anybody want to give a shout out to for Christmas time?
Oh, my beautiful Blanch and Helbig families and also the team at Homes and Acreage. We are just so fortunate to all have each other. So thank you for all your hard work this year.
All right, so thank you too for coming on to the Real Estate Breakfast this morning, and all the best of luck with those larger properties selling there in your location, and have a great 2025.
You too, appreciate it.
The Real Estate Podcast wishes you and your family a fantastic Christmas break and a happy new year ahead. It's time to go back to the Real Estate Vault for this week's property comment.
If we've got siblings listening to the podcast right now, and I guarantee you there will be, what are your top 3 pieces of advice, Victor, to siblings listening right now that they've really got to think about and cover off in an agreement or a contract going in on this basis of shared equity of a home loan?
So the first thing is that we suggest is to, when things are really good and they're going well and in the planning stages of this, meet with somebody to talk through, to documenting what happens if things don't go well. Okay, so if this doesn't proceed and it doesn't work out for the best for both of us, and things aren't rosy, what have we got to do from there? You know, what are the steps that we go through so that we can get that rectified? That's number 1. Number 2 is to look at the financial implications of it as well and understand what your responsibilities are going to be with the loan. You understand how the loan works, how it operates, who's responsible for which portion of the loan and how that's going to work. And then the last thing to sort of think about, I would suggest setting up a fair accounting system, or having an account each where you put money into, so that you can track exactly who's put what money into the property. If you can keep on top of that, so that if anything happens in the future and you need to, be able to reconcile what's happened, you know exactly, who's put in this share, who's contributed, what, etc.
Decode the property market with insider knowledge and insights to better navigate your real estate journey on the Real Estate Podcast.
Sometimes the buyer's agent has to walk away because it's just too difficult and the children don't have much of a say with the property that they're actually buying.
That's too funny. Well, we haven't had that factor with our clients. If you've got too many decision makers in the kitchen, you end up with a messy kitchen, right? So you've got to have clear lines of communication with your clients. But to your point about the bank of mum and dad, I can share a personal story, in fact. And I helped my son to buy his first property just a couple of weeks ago, in fact. We offered to put up an equity guarantee. We said, if you can save $100,000 of your own money, then we'll match that as an equity guarantee. And that's what my son did. And we were very successful a couple of weeks ago, securing a nice little apartment down by the beach, and him and his wife will be moving in there in the new year. So, there's a lot more of the bank of mum and dad actively taking part.
We connect you to the best real estate information across Australia. The Real Estate Podcast.